Join me for a conversation with a frequent guest of the show, David Morgan, the Silver Guru, an expert on money, metals, and mining, also a lecturer and an author. Mr. Morgan has written Get the Skinny on Silver Investing, available on Amazon.com. His website is themorganreport.com. David, welcome back to the program.
Oh, it's great to be back.
Now, you and I have been talking about this for maybe a year. You've been saying any time that silver was under $30 an ounce, you should definitely consider buying it or accumulating it. It's been under $30 for a long time. It's been down to 29, 28, 27, 26. Sprott and the Chinese came in and bought a bunch at the recent bottom. We're over $30 today. You had your chance, folks, and you called it, David.
Well, thank you. And what I was referring to, as you know, Ellis, was physical buying. Anytime you can buy silver under $30 for a long-term investment, I think it was well worth it. And as you say, we're up to about 30.60 as we're doing the show today. And I feel a bit vindicated. When it first went under 30, it was there briefly, and it popped right back up. But one of my paid subscribers said, wow, you really called that one. What do I do now? And, you know, I can't give individual investment advice. It's not allowed in the newsletter industry, but I did put it in the Morgan Report as a question, to the editor and said, look, it depends on you. If you're short-term oriented and you trade a lot, then, make a decision here. But as far as I'm concerned, it's a long-term hold. I don't see much of a better investment than the precious metals. We may get there again, and obviously from that point till this has probably been several months, but here we are above 30, and I think a key area to watch is the 32 level. That's from my work in, looking at technical analysis for so long, about where the first real resistance comes into the silver market. So I think we're good for probably another $1 on the upside, probably not in one day or maybe, but as fast as it's moving, it could be in another week or two.
Well, if you're holding 2 or 3 or 400 ounces of silver at a minimum, each day it goes up 50 cents or $1, you're doing all right.
Absolutely. And there are people that are on our list that are holding, 1,000 or 2,000 or 10,000 ounces. So, these bigger players with 10 or 20,000 ounces, as you said, $1 move is a $20,000 move if you're holding that much. Now, there aren't many that do, but there are some. And yeah, it's a nice vindication of the market itself. And, of course, we've got a long ways to go. I don't want anyone new or that's bought at 35 or 40 that's upset or whatever. I do believe strongly we'll get there. I think we're going to see 35 to 40 by the end of this year. And I think 2013 is going to be the next leg up in the metals. It'll be the beginning of the final leg up, in my view. And, again, that's subject to change. The reason I say that is it's always easy to look backwards in time and see the exact first leg up, second leg up, and third leg up. As far as the charts look right now, it looks like we've had 2 legs up and we have 1 more to go. Could be that 1 and 2 legs actually turns out to be just the first leg up with a blip in the middle. I don't know yet. I'm pretty confident in my calls on this, but again, the market knows more than all of us, and I very much say that because it's true. There's anyone out there that makes these calls 100% of the time accurately, but I think our record speaks for itself.
You not only recommended that everyone consider silver at $30 an ounce, but you also called a bottom to the market in August. And I think we can safely say that that's come and gone.
I think so. Going back in time slightly, I called the bottom for the mining equities in May, and it turns out from today's perspective, and I'm pretty darn confident on this one, that the mining equities bottom is in. And that's basis the XAU, HUI, GDX, GDXJ. Anyone you like to take, I like using the smaller ones like the GDX and the GDXJ, but anyway, that was in. And then for my paid membership, I wrote a month or 2 ago that, I've been at this really now, it's hard to say, but 4 decades. And it's been my experience that the equities usually bottom before the metals themselves. Usually it's a lag of 2 to 3 months. Again, that forecast in August bottom. The seasonalities haven't been working for the last year or so. I said even though the August bottom is seasonally the bottom for gold, usually I don't think it's going to be the case this year. I think it's going to be up and away in August. And here we are, the 24th of August, where gold is, made quite a move up and toward the $1,700 level, and against silver's pushing toward the $31 level.
We had some interesting news yesterday, which I posted on our website, about the GOP adapting a sort of platform policy about reinstituting the gold standard, since I guess it was the Republicans that took it away in the 70s under Nixon. Your thoughts?
Yeah, my thoughts. I'm a little skeptical on anything out of the mainstream media about gold or adopting a gold standard. But from the long-term historical perspective, I mean, basically the short-term course in monetary history is fiat money disaster back on a gold standard stability, then it morphs into a fiat money disaster and then back on a gold standard for stability. And that's really the short course. It's much more deep and complex than that, but those are the general ideas. I am for an honest money system, and the metals have always proven to be the best, and the best system is a bimetallic, or actually a trimetallic system. Gold alone is something that usually morphs into a paper money system. When you have a monometallic standard, a gold-only system, and who owns the gold makes the rules, and if the banks own the majority of the gold, they get to make the rules, which means to change the gold only to a partial gold standard, to partial gold backing, to a claim check on the gold that's in their bank, to and then they morphs into like what happened August 15th, 1971. Well, gee whiz, we don't have all the gold out there to back all these pieces of paper. We can't do anything about that. Sorry about that, folks, and they renege on the contract. And again, that's a repeat of history again and again and again. So I am for honest money, but I'm also for honest banking, and I think that a lot of things have to change. So just a platform, I think, is a good signal that at least some of the political class are waking up to the reality that things are not working, and if we continue on this lying paradigm of pretending everything's okay when it's falling apart all around us, I think something's got to change. So at least they're recognizing that. So that's the way I see it, Ellis.
Do you think anything in particular sent the market up recently as far as the price of gold is concerned? I don't think stocks have come along yet. When do you think the mining stocks will catch up?
Well, actually, the mining stocks, as I said, have bottomed, but are they making, the 2 or 3 times move relative to the percent gains in the metals? The answer is no, so it's a mixed answer. The bottom's in, they're showing strength. There have had some days where the mining shares have actually increased substantially without a big move in gold. The mining stocks are definitely waking up and will continue to do so, in my view. As far as, seeing this coming, that's a tough one. When I made my call to go long in the futures market on my advanced service where you get to see what trades I'm making, lack skill, call it whatever you want, I got in around the $28 level. We're up almost $3 from there, so on a single contract basis, that's well over $10,000 per contract. I want to give a warning. I don't give trading advice. I just allow people to see how I see the market and what I'm doing. On top of that, futures are definitely not for everybody. Most people do not belong in the futures market. Nonetheless, a lot of people like to see when I think a breakout's going to occur because they want to maybe leverage somewhat or not. In other words, they just like to see the timing. And I'm more of a position trader. I mean, this is not a trade of the week, trade of the month, trade of the year club. This is a as required, as I see it kind of thing. So sometimes you might get 2 or 3 videos in a month, and you might go a month and not see one. I try not to go that long without at least doing an update on either the commitment of traders or some news that's breaking in the precious metals or whatever, but nonetheless, it's random. In other words, some months you get a lot, some months you get a few, but nonetheless, I am on top of the market, and I do my best to serve those that are paid members.
We'll be right back. The Ellis Martin Report is sponsored by El Tigre Silver Corp, trading on the TSX Venture Exchange under the symbol ELS.V and on the OTCQX as EGRTF. Silver has been considered a precious metal for 6,000 years and currency since 600 BC. It's been commercially mined in Mexico since 1530 in mineral-prolific and mining-friendly Sonora State, where El Tigre Silver Corp's 5,000-meter drill program is now underway. El Tigre's properties with gold and silver mining concessions span approximately 267 square miles. With an attractive share structure and a strong, proven management team, El Tigre Silver Corp is poised to identify a resource in an area that from 1903 to 1938 produced 75 million ounces of silver and 380,000 ounces of gold. Additionally, their tailing stockpile is currently progressing to production. Learn more about El Tigre Silver Corp by visiting their website, eltigresilvercorp.com, or click through El Tigre's logo on the homepage of our website, ellismartinreport.com.
We offer expert opinions only. Find them on our website, ellismartinreport.com. That's ellismartinreport.com.
What are some of the things that you're going to be doing in the next few months to increase your knowledge of what's going on in the space and also your subscribers?
Well, I'm always learning. I mean, what I've taught my daughters and a lot of people close to me is, in my view, the best way to enjoy life is to become a lifelong learner. And as you may know, Ellis is in this movie, The Four Horsemen, and in that movie they have a quote from Mark Twain, and I don't have it verbatim, but basically he never let formal education get in the way of his lifelong learning. I mean, that's not the exact quote, but that's the idea. And I think Mark Twain was quite a character. nonetheless, I have a lot of people that help me now. I mean, the staff has grown rather substantially over the last decade, and so I have some very bright minds that help me, and I get stuff from my members as well. Hey, David, did you see this or did you see that, or would you comment on this or that type of thing? In fact, this trade that I put on didn't necessarily come from a subscriber, but it was one that's been with me quite some time, and he said, David, I know about the seasonality trade that you did last year, and it actually didn't work last year. What do you think about this year? And I started doing some work on that and visiting one of my friends that's one of the best traders that I know of, Courtney Smith, and I started looking at everything and going, this thing is a setup. This thing just looks too good. So I went back and did a little more work and said, you know, this is it. I'm pulling the trigger. And, of course, again, I put that out for our paid members. So I really enjoy what I do, but as far as can I learn enough? No, I'm always learning more. And what was coming up, I think what's coming up is some gains now, finally, for people that want to get into the silver market, the gold market. The only concern I have going forward, Ellis, right now is the overall general stock market. It looks like a real setup as a bear trap, even though, yeah, the Dow's looking very toppy or, you know, making new highs or toward them, and the S&P looks good, and you're seeing a lot of things of why you should be in stock in the mainstream press and some of the alternative press. The truth be known that the volume is very weak. All the work that I do and others that really look at some indicators, a bit of a clue to what's really going on underneath the market, the underlying strength is not there. So what scares me a bit is that we could get a general market sell-off, and the mining stocks would probably fall back somewhat, but I don't think they would fall back to the low that I've already called. In other words, I think, yeah, they'd sympathize somewhat and then rebound sharply. So bear that in mind. It's always hard to make these calls, but as you know, Ellis, I'm not afraid to stick my neck out.
Well, October seems to be the month typically for these types of pullbacks that you're referring to.
It does, and it wouldn't surprise me to see that, and I don't want to contradict myself that I don't like the seasonalities this year in the metals. As far as the seasonalities in the general stock market, no, actually they're actually holding fairly well. And then, of course, you've got to factor in it's a political election year, it's a presidential election year, and depending on the powers that be, how they want to move the market or make it look, if there's a lot of power and a lot of fiat, which they control, and they don't want the market to fall too far, they do have a lot of power, and they pretty much can prevent it. The market itself can actually overpower them, at least for a short term, but we'll just have to wait and see. It's a tough call because it's an election year.
And to follow you, it's Silver Guru on YouTube and themorganreport.com.
That's correct.
Thanks so much for joining me today on the program.
My pleasure, Ellis. Thank you.
I've been speaking with the Silver Guru, David Morgan of themorganreport.com. Listen to the segment again on the podcast page of our website, ellismartinreport.com.